Good morning, everyone. Thanks for joining us today. We'll be joined shortly by Jason Goodrich, our regional rep from EquiTrust. He'll be discussing some of the new programs that EquiTrust is offering now. A couple brand new products they've come out with, the Max and the Force. And we're seeing a lot of play on these right now. Really a great combination on those products. So we're excited to have Jason join us here shortly. Glad you could join us on a Friday morning. I know it's been a pretty miserable week here in Nebraska weather-wise. Hopefully you're getting better weather where you guys are at, but we're glad that you could join us here on a Friday. We still offer our new producer builders. It's a good way to get some nice additional benefits based on production your first 180 days of being licensed through IAMS. We've got different levels you can qualify for, anywhere from $100,000 up to $1 million, and with a lot of different items you can choose from: iPads, cash, different types of lead systems, radio show, doing mailing, seminar systems. Really a good grouping of programs you can choose from based on your production through IAMS. So that's something we've been offering for the last number of years and have had great success with agents utilizing some of these benefits to expand their business. We also have a referral program. You refer agents to IAMS, you get additional dollars based on those referrals, and then you get monies based on their production. We also have marketing reimbursement. You get reimbursed $100 for every $100,000 of premium goes into a bank account, and then we reimburse half your cost. So if you did a seminar that cost $3,000, we'd reimburse $1,500 of that based on your marketing reimbursement account. A great way for IAMS to help you out with your marketing costs. We have a great back office support team. We have a great new business team, a great contracting team, and creative team. I know they can help you out with getting in front of more clients, help with getting your process, your business through. I know with all the suitability issues, 50-page applications, it's really expanded out on what has to be done on these apps. They help you through that process. We do have a really good e-app system called Firelight. Most of our companies utilize Firelight. It's a great way to submit business. It really speeds up the process. You don't have to worry about misspelled names. You don't have to worry about, missing boxes there need to be checked on specific pages. It will not let you advance and finish the app until it's 100% complete. So really a great system there with Firelight. About 30 to 35% of our business comes in on e-apps now. That's gone up tremendously the last 24 months, and we expect that to be at the 50% mark here in the next year. So and we're continuing to see more and more people utilize Firelight, and for individuals that want to make sure their apps are going in and getting processed as quickly as possible, it's a great way to go with that Firelight system. As I mentioned, we've got a great creative team. We've got 5 or 6 individuals that work on that team. It's a great system utilized based on what they can help you out with in regards to advertising, marketing campaigns, maybe redoing your website, redoing your business logo, putting together a marketing system you can use on social media, utilizing emails, doing online newsletters. We have a lot of different programs that you can utilize. You got different drip systems you can use. Maybe you want to, drip on your clients on what's going on, what's coming up, with interest rates starting to climb, maybe the shaky stock market, some information you can send out to your clients based on different items you can help them out with in the field. So definitely a good individuals to get a hold of on that creative team. I know we've got Jacob, Sean, Russell, Julie. We have a whole group of individuals that can help you out on that side. So if you do have interest, this is Matt Tour. I'm a marketing specialist here at IAMS. Been here for over 20 years. Give me a call. I'd be glad to help you out with the programs you're looking more to get into, and then they can really, advance your marketing side of your business there. So definitely a great team to work with. We have a great website, the www.imsinc.com. We have a lot of good marketing tools on there. You can do quotes. You can look up interest rates. You can look up, rates for a 5-year rate guarantee. You can look up who has the best income based on a specific situation. A lot of valuable information you can look up on our website. We have our latest annuity grids on there. You can look up interest rates on different carriers and really maximize your time and be able to utilize some of the tools we offer on that website itself. We have our retirement analyzer program. It's a software system you utilize with clients. I know we have a number of agents that use this all the time, and it's a good third-party system you can go to. It's free of charge as long as you're doing business through IAMS. We'll go ahead and provide that software to you. You can speak to Marcus Solar in the office here. He'd be glad to get things going for you in that marketing analysis, retirement analyzer software program. And once you plug the information in, it kicks out a really good report, a lot of good graphics, charts, information. You can plug in all kinds of details. Maybe the client's going to buy, a Corvette when he retires. Maybe he wants to go on certain vacations per year. You can put all that information into the software. It's going to kick out a really great report that you can utilize right in front of clients there. So definitely take a look at that once you do have some time to work with Marcus on that side of it. We opened up our wealth management side of our business here about 2 years ago. It's been going gangbusters. I know we see a lot of agents utilizing the wealth management side. I'd say about 90% of our top 40 agents are securities licensed now, and they do work on both sides of the market, the insurance side and the security side. If you have interest in getting some more information on the wealth management side of the business, we'll be glad to get that emailed over to you and get you started on that end and really be able to create some momentum for you on that side of the market. We'd be glad to get that done for you. So I'll leave this open for about another minute or so. We have a lot of different platforms you can choose from for your clients' investments. It's a system where maybe you don't have your Series 65 right now. You're looking at getting that taken in the next, couple, 3 months, maybe later in the year. They have a good system for studying they can help you out with and help you get to that point where you can pass the test. I know a lot of agents have difficulty passing that Series 65 the first time around, and they can give you some helpful hints on what you need to do to, get that test passed in your general area. And then once you have that passed, they'll help you get set up on the security side of the business. I know we have a lot of agents now that are earning some really good monies based on AUM, assets under management, and typically it's a 1% fee that you get, based on those clients' dollars, and really a nice way to build up that business. And with a lot of carriers now offering trail options, including EquiTrust, you can set up some nice trail options with your clients there based on that business also. So make sure you keep that in mind based on that wealth management side of the business here. I just went ahead and close that up for you. I'll go ahead and get to the next slide here. We continue to offer some really nice incentive trips. I know we have one that's qualification runs through June of this year. It was a 19-month qualification. We're doing a cruise in the Mediterranean around Italy, stops in Greece, Croatia, Montenegro, Sicily. A lot of great spots to be stopping at on this cruise. I know we already have about 25 to 30 people have qualified. Probably end up with about 50 qualifiers on this trip. Should be a really nice trip. I know we have a lot of very excited people that have qualified and look forward to getting on board here in, I believe it's in late August, early September. So should be a great time of year to go on the trip. And we look forward to having as many of you on board on that as possible. We also do our academies. We do typically 2 or 3 of these a year. We had our first one's actually coming up in April. I believe it's the 6th through the 8th. Should be a really good meeting. We hold about a quarterly basis, and we bring agents in. This one's going to be in Des Moines, and it should be a really solid meeting. We bring in a lot of good speakers going over sales ideas, information on products, some of the latest trends, based on what's out there in the market. I just launched another quick poll here. If you do have interest in attending one of our meetings, we take care of your flights. We reimburse you if you do drive in. Your room and board's all taken care of. Usually starts on a Wednesday evening, runs all day Thursday, runs into Friday morning, and then you'll be released right around noon on Friday to go back to your locations. We have a lot of agents that attend this. They pick up some great sales ideas. They take those back home with them. We see their business, percolate the next few months. Definitely worth your time and spending some time with some of the reps. You could pick up some good sales ideas from the other agents that that are there. We bring in some of our top producers. They go over some different information and getting in front of more clients, closing more sales. The keys to to being successful and to increasing your bottom line. So that's what they try to help you out with. And I think it's definitely something to look at. So I'm gonna leave this open for another 30 seconds or so. So if you do have interest in attending one of these meetings, maybe you're not able to attend in April, we'll probably look at another one in June, sometime in the middle of June, and they'll probably do another one sometime in September. So keep those time frames in mind. So we got April, June, September, and it's a great way to pick up some good information. We'll have a lot of our staff there. You get to meet some of our IAMS staff, marketers, some of the other individuals there. So make sure you definitely keep on hand for that. I'm gonna go ahead and get this one closed up. Get moving here forward. If you do have any questions along the way, you can get those asked as we go through the presentations today. We'll go ahead and get these answered as we go along. Otherwise, if you do ask this later in the segment, I'm gonna give everyone a call that attended today's webinar, and I'll be glad to get any questions answered at that point. So question came up regarding non-qualified IRAs and Roth IRAs. So a Roth is, a straight IRA program. It's a qualified account. It's really not considered to be non-qualified money because it is taxable, down the road to your beneficiaries if they don't utilize those monies within 5 years of inheriting the money. So, it is a good way to avoid taxation for your client regarding investing that that the principal and interest is tax-free to that individual until they pass away. Of course, there's different rules regarding holding it for 5 years. Different rules, regulations you want to check up on that side. But Roth is really a great way to invest some money, have it as a tax-free situation moving forward, and then your beneficiary gets that tax-free for 5 years. Then they'll start paying taxes on those dollars. So keep that in mind, with those Roth IRA situations. But with IRA season on hand right now, we do see a lot of interest in smaller accounts. People looking at getting money into IRAs. I know EquiTrust has got some really good products you can utilize for IRA deposits. I know that the Market 10, we've seen a lot of play off that regarding the use of that for IRA and Roth IRA accounts. So I'm sure that we'll talk about those here a little bit with Jason. So we are on Facebook and LinkedIn, a couple nice platforms we utilize for advertising and keeping agents up to speed with what's going on in the market. So definitely follow us on those two programs there. And then anything that you do have questions on regarding what's being advertised on LinkedIn or Facebook, you can go ahead and give us a call based on that information here today. And then I know that we'll be welcoming Jason on here this morning, and Jason's got some great information he'll be covering on EquiTrust today. He's got many years of experience with EquiTrust. He's been there a long time. He's got some great experience on both the annuity and life sides. Jason really specializes on the annuity side these days. So welcome aboard, Jason. You need to change presenters over to you at this point?
Yep, sounds good, Matt.
Okay, I'll go ahead and do that. Get that switched over here. Looks like you should be up and running right now. You're good to go.
Awesome, appreciate it. Thank you, Matt.
You're welcome.
Good morning, everybody. As Matt said, my name is Jason Goodrich. I'm National Senior Accounts Manager here with EquiTrust Life Insurance Company. As Matt said, I've been here quite a while. I've been here almost 18 years at EquiTrust, so pretty much since the beginning. And very thankful to be with this company and thankful to work with IAMS. One of my top groups have been pretty much for all 18 years. So appreciate them. As Matt said, what I'm going to focus on today is mainly the two new products we just rolled out in December that we're getting a lot of momentum in. We're seeing a lot of success in and a lot of sales coming in on. And I think you'll see why as we walk through those. And I'm also going to talk a little bit about inherited IRA. We came back out with allowing inherited IRAs post-Secure Act recently, and we're seeing a significant amount of business come in there. So I do definitely want to talk about that and the options we have around that. Then I'm going to close by talking about a Roth sales idea. Really, the idea is, I think it's pretty unique, pretty cool idea, and it's about a way to address the tax issue that a client faces when they do a Roth conversion. So hopefully cover all this in probably 20 or 25 minutes. So I'll move through at a pretty quick pace, but obviously at the end, feel free to ask any questions, contact us, contact Matt and the folks over at IAMS. With that, let's go and get started. Okay, before I get into the two new products, I do want to touch just briefly on the 4 index annuities we have in addition to those 2 new index annuities. So the 4 products you see in front of you, the Market Power, Market 10, Market Value, and Market 7, they've been the 4 products we've had pretty much since 2004. We haven't changed a lot with those products. We've updated them, done some minor changes, but we've been pretty consistent on the same product portfolio we've offered, and we continue to offer them just because they've been very successful. I think when you look at these 4 core products, there's kind of 3 niches, I'd say, that you really see with us. Number 1 is premium bonuses. We've been a leader in that area since the beginning. You see we have 2 products in the old suite of products that offer premium bonuses. So the Market Power bonus, which has been our flagship product, offers a 10% upfront premium bonus. That's a cash bonus. It's a real bonus. There's no vesting, no recapture. It's immediately part of their contract. It's on either a 14-year or a 10-year chassis, depending on the state that you're in. Some states are 10 years, some are 14 years. And then the other product we have with the bonus is the Market 10 bonus, and that's a 6% bonus. Matt mentioned a little bit ago about flexible premium. This product here is a good flexible premium product because that 6% bonus is good for any premium in the first 5 years, and there's no rolling surrender charge. Okay, so anybody in the first 5 years will get that 6% premium bonus. Then one of the new products I'm going to talk about is an 8% bonus product. So as of now, we have 3 products that offer premium bonuses, all vested day 1. Second niche with us, where we're really seeing the growth is with straight accumulation products. And you see the 2 products we have here, the Market Value and the Market 7. The Market Value product was our number 1 product last year. And it's kind of a bare-boned fixed index annuity where we really put everything into the maximum caps, maximum rates. It still has 10% free withdrawals and the basic features of an index annuity, but there's no bonuses or anything. It's very clean, very simple, easy to understand, easy to explain to your clients, and most of all has performed. Really strong renewal rate history. I think anytime you look at an accumulation product, it's important that the company has strong renewal rates. And with EquiTrust, we're very transparent when it comes to renewal rates. We publish every single one of them on our website. So you can go to our website, look at any issue date of any product, and you will see what policies on that date issued at and what they renewed at every year. Market 7 is very similar to the Market Value, except it's a 7-year chassis. Once again, it's built for accumulation. It's just a shorter term, so the rates and caps are just a little bit lower, but still very competitive. Because of the move to accumulation we've seen has driven the development of the 2 new products I'm going to talk about in a second, because they really are also accumulation focused. And the third niche is return of premium. We just talked about the Market 10 with a 6% bonus for any premium in the first 5 years, but it also has a built-in return of premium guarantee in it. So any policy we issue, if the client needs to get out of it for any reason, they're guaranteed to get all their money back. It's really a great peace of mind feature. I think it's a great option to a client that, an index annuity makes a lot of sense for, but for one reason or another, they can't get past the surrender schedule, even though maybe it shouldn't be a concern, maybe it is to them. I think the Market 10 bonus is a great product to pivot to in those situations because it has all the features of an index annuity, because it is, but it also has a guarantee that they get their money back at any time. And what we see is most people don't ever do that. They don't ever use the return of premium rider, but it gives them the peace of mind up front. Those are kind of the three big niches: is premium bonuses, really strong accumulation products, and return of premium guarantees.
Hey, Jason.
Yeah.
I had a question come up on the market value. I know it has an income rider. That has a bonus on that when you add that on, correct?
Yeah. There's a 10% bonus if they have the income rider on the income side of it.
On the income account, right? On the market value. So it's another good reason to sell that plan is it has really good benefits on the income side, especially that 10% additional bonus on that end of it.
Yeah. And I will say, I mean, most of we do see most non-income sales, but if you're going to do an income sale, that is probably the best product for us. So. Okay. Thank you, Matt. Yeah, moving on to the new product. So, as I mentioned, we've seen a big shift to accumulation. That's kind of why we designed these two new products. That's kind of where we're seeing the industry going. So the goal with both of these index annuities is to maximize the account value growth. And what we did was we added some crediting options within both of these products where the client can pay a fee, right? And in exchange for that fee, they're going to get higher rates and higher caps. Okay, they don't have to choose the strategies with the fee, and we'll talk about that, but they can choose them. Like I said, in return, they're going to get a higher growth potential. The first one is called the MarketMax. And if you look at this product, what it's going to look like is it's going to look like the market value product that we just talked about on the base contract. It's flexible premium. It's a 10-year design. There's no bonus. It issues to age 80 and pays 7% commission to age 80. The difference is it's going to have these buy-up options. There's going to be some crediting options where they can pay a fee and get higher participation rates or caps. As you see here, the fee is 1%. Okay, that fee is locked in, so it will never change. Okay, so they don't have to worry about the fee going up to 1.5% or 2% down the road because it's guaranteed not to happen. It's contractual. Okay, so let's look at the importance. Let's look at the caps and the rates and the strategies. So what you see here is we have three strategies that there is no fee. There's a fixed rate. There's a point-to-point cap on the S&P 500, and there's a point-to-point par account with the S&P Mark 5. Any monies they allocate to these three strategies, there will not be a fee. It'll work just like any other index annuity, right? It'll have a cap or a rate. Then there are four strategies here which do have the 1% fee. So anything they allocate to these strategies would all have the 1% fee, which would come out the beginning of each year, okay, based on the account value of that strategy. Here's the rates. Right, for the non-fee rates, you can see we have a 4% cap on the S&P, very competitive. 95% par on the Mark 5, very competitive for no fee. For the fee strategy, you can see we get as high as 8.5 cap on the S&P and 135 par on the Mark 5. What that works out from an illustrated rate perspective is illustrated rates as high as 6.89% on an S&P strategy and over 8% on the Barclays Focus 50 strategy. Now, what I like to look at more than illustrated rates, though, is the effective illustrated rate. Okay, I think this is the more real thing to look at because what the effective illustrated rate does, and I don't know if other carriers show this, but we do because, once again, like I said, we want to be very transparent. What this rate shows is it factors in the 1% fee. So let's look at the account value 10 years down the road, taking out that 1% fee every year. What would the effective rate look like? So this is the real illustrated rate. And you can see still very strong. You know, you look at the Focus 50, it's still almost a 7% effective illustrated rate. Okay, and over 5 on the S&P strategies, even after taking the fee out. And one thing I point out too is obviously there's other products out there that have really competitive buy-up strategies, things like that. I think one area where we really stick out is we're very competitive on all the strategies. There's a lot of them out there where maybe they have one index, vol control index, which has a really high rate and really high performance. The problem is you're kind of stuck with that one rate, right? If it doesn't perform, there's really nowhere else to go that's competitive within the product or to diversify with. With EquiTrust on all of our products, we don't subsidize. So what you see is we're very competitive up and down the board, right? On the vol control, like I said, we have a 7% effective illustrated rate, but on the S&P point-to-point cap, it's still 5.68. On the par on the S&P, it's 5.82. So across the board, very competitive, gives you and your clients lots of options to reallocate year to year and to diversify. So kind of breaking it down again, we have the three no fee options. if they choose to, they could allocate all their money to the no fee option. You know, maybe you feel like it's going to be a bad year in the markets and they're going to go down. Well, you can just reallocate all the money to the no fee options. They wouldn't have to pay a fee. And if it still performs, you still get good returns. You still have a 4% cap on the S&P 500. You still have a 95% par in the Mark 5. And then we have the 4 fee options. Okay, so any money allocated to here would have the 1% fee. I think the other important thing to look at with this product and competitively at other products that are similar to this is, what are you getting for your fee? You know, what is the bang for your buck? So if you look at us, we have a strategy here, the S&P point-to-point cap, where we have a no fee option and a fee option, as I said. And you can see what you're getting for that 1%. It's changing that cap from 4%, over doubling it all the way to 8.5%. So the client's getting a lot by paying that 1% fee. They're getting a 4.5% higher cap, which equates to doubling the illustrated rate and a 2.5% increase in the effective illustrated rate per year on an annualized basis. Same thing with the Mark 5. You know, we have the no fee and the fee option. It takes that no fee, 95% par, very competitive, takes it all the way up to 135% par, right? And you get a lot higher illustrated rate and you get a higher effective rate by paying that 1% fee.
Okay. Question came up, Jason.
Yeah.
So if someone does split it up between, like, say, 2 non-fee and 2 fee buckets, they only pay the fees on the monies are in those specific fee buckets, correct?
Yes, whatever we'll look at the account value in the fee buckets that they're allocated to. So right. If they had 50% in the no fee and 50% in the fee, we would look at the dollars in the fee account. That's only the 1% would be charged on that.
Right.
So if they could put all the money in a non-fee and have no charges a year. Here they can reallocate between those.
Right.
Okay.
So last year, didn't the S&P par rate with paying a fee, and the S&P was up about 20% last year, so the client would have made 9 minus 1, they would have made about 8. And then the S&P annual point-to-point cap, you would have maxed that out, you would have made 7.5. So those are probably the 2 best last year, weren't they, based on what the S&P and the Focus 50 and the Mark 5 did last year?
Yep. And like I said, I think that's an advantage is that we have very competitive S&P strategies. I mean, the vol controls, you know, to be honest, have not performed that well with most of them for the last, year, and then they're not this year.
Right.
Great. So it gives you the option to diversify between all of them. I mean, obviously we can't predict what's going to perform best. That's why I think we have so many competitive strategies. Like you said, with that 45% par on the S&P would have been great last year. You know, because the S&P was up in 45% of that. Yeah, even that's where the effective illustrated rate comes in, Matt, because that takes into account the 1%. So that's subtracting.
Right.
So that's over 10 years. So over the last 10 years, taking out the 1% fee, the annualized return would have been 5.82 in that strategy.
Yeah, real strong.
Yep. Good. Okay, let's move on to the other product. It's called the MarketForce. This is the other fee product that we have. It's going to be similar, but there's going to be some differences. It is single premium. It's also a 10-year design. As I mentioned earlier, this one has an 8% premium bonus. Once again, the premium bonus all up front, vested immediately, a true cash bonus to the client's contract. Other thing I love about this one is it issues to age 80, 7% commission. So all the way up to age 80, including age 80, the client would get an 8% premium bonus and full commission all the way up there. You know, for me, even without the buy-up options, this makes a lot of sense when you have an 8% premium bonus to age 80. If nothing else, it makes sense as a wealth transfer vehicle. You know, if a client's uninsured, you have an uninsurable client or something, maybe not super healthy, you can get them an 8% premium bonus up front that they're not going to lose. You know, all the way up to age 80 and still get the full commission on it. The buy-up option is very similar to what we just talked about. One difference is it's a 1.5% fee. The MarketMax was a 1% fee. The MarketForce is a 1.5% fee. You know, the reason we did that is the actuaries did what they do and they ran all the different numbers and scenarios, and it made the most sense to a client to have a 1.5% fee on this to really maximize the growth potential. So yeah, a couple key things about this once again is the 8% bonus all the way to age 80, the full comp, and the buy-up option. So let's take a look at the rates on this one.
Do you allow the client to put more money in the first year, or is it just a true single premium?
No, but like all of our single premium products, they can add money in the first year. and still get the full bonus. Yep.
Yeah, so they put any money in the first year, they'll get the 8% bonus. Then after the first year, no additional monies.
Correct. And we see a lot of people doing that because, maybe they have another contract coming due 6 months down the road, or a CD or whatever.
Mm-hmm.
People add to it in the first year.
Okay.
This one has the exact same crediting strategies as the MarketMax. Once again, you can see the fees 1.5. So we look at the rates here. Your no fee rates are going to be less, right, than the MarketMax because you have an 8% bonus. So instead of a 4% cap, it's only 2.25 on this. But once again, you have the 8% bonus. But with the fee, you can see you get a lot higher. You get a 5% cap. You get 115% par on the Mark 5. Once again, the effective illustrated rate's the number I like to look at. I mean, you have illustrated rates on the S&P of 4.5, of over 5 on the Focus 50. I mean, as you guys know, when you get a big bonus up front like that, usually your growth potential is pretty limited. This is a bonus product that has really strong accumulation potential. There's not a lot of that out there. So this is an 8% bonus product, which you can get 4.5% or 5% potentially. So it makes a lot of kind of addresses the issue with bonus products of not having any sort of long-term growth potential.
Yeah, I just launched a quick poll. So anybody interested in getting more information on the 2 new plans, EquiTrust in general, mark yes off on the poll. I'll go ahead and get those out to you today or tomorrow or Monday, and then we'll go ahead and figure out what you need moving forward. So yeah, mark yes on today's poll if you'd like to get additional information on that EquiTrust. Back to you, Jason.
Yep, thanks, Matt. So once again, what do you get for the 1.5% fee? Well, you're doubling your S&P point-to-point cap. Over doubling it. Your par rate in the Mark 5, you're going from 55 to 115. So once again, the client's getting a lot of bang for their buck, but they don't have to choose the fee option. I mean, that's the flexibility that we try to give the clients is, let them decide where they want to be allocated and which strategies they want to use. One last thing I'd mention about the MarketForce, one nice thing about it is obviously, some people are going to be fee conscious. Some people, is not going to be interested in this product. But if somebody's interested in it but is a little worried about the fee and maybe their account value going down because of a 0 year, but they still pay the 1% fee. One nice thing about this product is the 8% bonus, like I said, is up front. So the 8% bonus actually pays their fee for 5 years, right? So if in the first 5 years, the S&P or the market returned nothing and they were in a fee strategy, they would still have more money in there than their premium after 5 years because of that 8% bonus. So it's a way to address that concern too, with the bonus to know that, if the market goes down 5 years in a row, they still have more money than they put into it. And obviously, unlikely that's going to happen where it goes down 5 years in a row. Hopefully, if it does, we probably have bigger problems. But I did want to point that out. So let's just take a look at some, review some of the competitive advantages I see with the 2 EquiTrust products. Number one, very simple design, like all of our products, with just the 6 crediting options, the 4 buy-up options and the 2 no-fee accounts. I will say there are some products out there that have as many as 24 crediting options in a product like this. Once again, we really tried to pick the best strategies, the best performing, and really try to simplify things as much as possible. I mentioned this too, but the competitiveness, not just of the vol control strategies and not just of the S&P strategies, but of both, right? I think that's where we really shine, is that we have so many crediting options that are all competitive. Renewal rate integrity. I mean, I think renewal rate integrity is important in everything. I think it's even more important in a buy-up type product, right? Because you have a fee coming out. In some cases, the fee can go up. With us, it can. But if you have a fee increasing and renewal rates coming down, a client can really get squeezed on both sides, right? Well, with us, the fee is guaranteed, right? It's not going to change. It's going to stay at that 1% or 1.5%, depending on the product. And with renewal rates, as I mentioned earlier, we're very transparent. We don't subsidize. We publish all of our renewal rates. We take a lot of pride in our renewal rate integrity. As you know, renewal rates are not perfect, right? They move sometimes. They come down sometimes. They go up sometimes. I think the important thing is that you're able to explain changes in renewal rates to your clients. And like I said, we take a lot of pride in our transparency regarding that. I mentioned full agent commission on both products all the way up to age 80. And then with the MarketForce, you get that premium bonus up front. And that's going to allow, obviously the bonus is going to help them in lots of ways, but it does address the concern that if the fee's coming out, they know the bonus will cover the fee. Anything else you want to add, Matt, before I move on to these products?
Yeah, I mean, I really like that MarketMax. I mean, I really like those rates. I mean, if you can get an 8.5% cap on the S&P, I mean, you would have maxed that cap out pretty much every year the last 12 years, based on what the S&P's been doing. And some of these vol control strategies, I mean, they work well in certain situations, but last year the market was way up and those did not do well. I mean, I always like to go heavier on the S&P, and with that par rate at 45% on the other strategy, I think you're really in a win-win there. You can, mix it between those two strategies, maybe throw in the non-fee S&P annual point to point with 4% cap. That way you really can diversify amongst the S&P, and I think you're going to really see some nice returns on that.
Yeah, no, I totally agree, Matt. And like you said, that 8.5% cap, it would have maxed out, and most years the S&P's up. One interesting thing, I was looking back on this a while ago, but usually if the S&P goes up, it goes up by quite a bit more than the cap. If you have a 5% cap, it doesn't usually go up 4% or 5%. If it goes up 10% or 15%, it seems like. So to have a high cap like that, and that also bodes well for that 45% par too. If you get a 20% return, you're going to get but yeah, I mean, no, I totally agree with you on that, Matt.
Yeah, I mean, I like that a lot. I mean, I actually own a market value, and it's done really well. And I think this one would actually do better than that one actually has been doing. So it's definitely a win-win for the client and yourself as the agent.
Great. Okay, let me move on. I'll talk a little bit about something we came out with last fall. As most of you know, it's the Secure Act that really changed things with stretch and inherited IRAs. And at EquiTrust for a year, a couple of years, year and a half, we didn't allow stretch IRAs on any deaths 2020 or later. That changed last fall, and we are now accepting business on all stretch and inherited IRAs. So let me talk a little bit about that. First off, the new rules. There's basically two categories of beneficiaries now. If you're not familiar with this, there's your eligible beneficiaries, and that would be a spouse of a deceased IRA owner, a disabled person, a chronically ill person, or an individual not more than 10 years younger than the deceased owner. So that's your first category. The other one, which is most people, or most situations, is the ineligible beneficiary. That's just anyone that does not fall under one of these four categories. Okay. At EquiTrust, we're accepting stretch and inherited business on both of these. Okay. Now, how's it work? Okay, with the eligible beneficiary, the rules are like they used to be. They just stretch it over their lifetime. Okay, so they just take out RMDs every year based over their lifetime. With EquiTrust, you can use any of our deferred annuity products for the stretch IRA, and we do allow you to add the income rider. If you choose to, we do illustrate that. Okay, but once again, most people are going to fall into the ineligible. This is an area where a lot of carriers are not accepting the business, and EquiTrust is. So with the ineligible beneficiary, which we refer to internally as inherited IRA, we'll allow any of our products, our deferred products, except for the market power bonus. And then the confidence income is our SPIA. So you can do this on our 10-year products, like our market value that we've been talking about, or the two new products we talked about. You can do an inherited IRA for an ineligible beneficiary with those products. Income riders, once again, are allowed on them. If it makes sense. You can illustrate that and show an income rider. And then the way it works with the ineligible beneficiary is they must pay taxes on it by 12/31 of the 10th year following the original IRA owner's death. Now, that doesn't mean they have to surrender the contract in 10 years. I think there's some confusion on this. What it means is when the 10 years is up, if there's any account value left, what we're going to do at EquiTrust is we're going to 1099 the client whatever value is left in there in 10 years. We're not going to make them surrender it. We will just convert it to a non-qualified contract. I think what we're already seeing a lot of people do is they're going to take out withdrawals every year, right, to help spread that out a little bit. Maybe they do a 10% free withdrawal each year to pay the taxes on and convert it themselves to non-qualified. I can tell you we are doing a lot of business in this. We're one of the few carriers that offer this right now, and maybe Matt knows, but I don't know of any other carriers that allow it on a 10-year product. There may be some out there, but there's just not a lot of options out there. And then not to mention with our market value product, the new products, lots of account value growth, right? And I think if somebody's going to defer this, they want a product that's going to get a lot of account value growth on it.
Yeah, and one thing good about what EquiTrust does, they don't require a client to take money out of their contract. They can leave it in there for the full 10 years. They get 1099 at the end of the 10th year. Boom, they keep moving forward. But of course, they do allow 10% freeze. So if a client does want to take out those free withdrawals along the way, they're able to do that also. That way they don't have that time bomb at the end. They're able to stretch those dollars across the board.
Yep, absolutely. And what you see on the screen here is a couple nice pieces we have I want to point out regarding the inheritance stretch IRA. The first one here, you see there's the rules. And this is really an educational piece for you and your clients. It goes through the changes with the Secure Act. It's a really nice resource piece, just to help you understand what the changes were and what the new rules are. Then the second piece is more of a sales piece. So it'll go through a couple examples of, if the client chose to stretch instead of just paying the taxes now. So it's a really nice point of sale piece that you can use with your clients. Both these are on our website. Obviously, you can contact Matt or whatever. We can get them out to you. We have this like in a glossy that we can mail out as well too. So a couple nice pieces there. Okay, the last thing I want to talk about is conversions and a sales I did. This was something I came up with a couple years ago. Obviously, Roth IRA conversions make a lot of sense to a lot of people, to most people. The one downfall, obviously, is it's a big tax hit or a big tax bill to the client at the time of the conversion. Right? If they do a $100,000 conversion on an IRA, convert it to a Roth, that's great down the road. The problem is they got to come up with $15,000 or $20,000 now to pay the taxes on it. So this is kind of a idea I came up with on how to address that and how the client can maybe pay that taxes without having to come up with $15,000 or $20,000 out of pocket. Now, I do want to mention this is just an idea. Right? It's a sales idea. I do not have a calculator at this point or any marketing pieces. So when I go through this, just know that there's nothing we can send you on this. I can't do an illustration. I don't have a calculator or a sales piece. We are working on that stuff right now. But I still think it's important to give you the idea. And I think you can still use the idea today with your clients. So let's go through the example. So example here is a $250,000 IRA sitting somewhere. What we're going to do is we're going to send that $250,000 to EquiTrust, and we're going to split it between two contracts with EquiTrust. We'll do a split ticket here. We're going to put about $179,000 into our market power bonus. That's our 10% bonus product with a 10% premium bonus. We're going to put the remainder, about $70,000, or close to $71,000 in the market value index. That's our straight accumulation product we talked about. At that point, we're going to go ahead and convert that market value index to a Roth IRA. Okay, with EquiTrust, you can do it at any time, so you don't have to wait a year like you do with some carriers. So we'll convert that to a Roth. Obviously, that's going to be taxable to them when they do their taxes next year. So 22%, we're assuming a 22% tax rate here. So the client would have $15,553 due taxes, okay, for that conversion. On the other side here, we're going to take that market power bonus. We're going to put that money into the fixed account. Now, the fixed account's not very high. It's only 1.1%. But what I want to make sure I'm doing here is I want to make sure I'm guaranteeing exactly what their value is going to be. By using the fixed account, I can guarantee at the end of year one, the amount is going to be $199,403 in that contract. Okay, the 179 plus the 10% premium bonus, all accumulated at 1.1 equals $199,403 at the end of the first year. At that point, we're going to take a free withdrawal because after the first year, they can do a free withdrawal. So 10% of that obviously is $19,940. Okay, so what we got is we have $15,553 taxes due. The client just took out a free withdrawal of $19,940. Why did they take $19,940? Well, because that's going to be taxable too, right? So the net withdrawal after we withhold the taxes is $15,553, which happens to match perfectly the taxes due on the Roth conversion, right? So we EFT them that or we mail them a check. They use that money to pay the taxes due on the Roth conversion. Okay, so then what they have is after they've done that, they now have an end of year value of the market value of $75,455. Market power end of year in 1 day, right? After they took the free withdrawal, they have $179,462. Okay, the total of those two is $254,19. Right, so 1 year and 1 day later or 1 week later or whatever, the value is more than they put into it the year prior. However, they converted over 75,000 of it into a Roth IRA and paid nothing out of pocket. I know it can be a little confusing going through this. I wish I had a piece to send out to you, but that's the idea. So really the idea here is the client is using the premium bonus on the market power bonus to pay the taxes due on the Roth conversion, right? And protect all their principal. You know, you could even do this with the new MarketForce instead of the market power. You get an 8% bonus, but you have a lot more accumulation potential in that product, right? So you can do it with any products, but you know, the idea here is using the market power and the market value.
Question just came up, Jason. Does EquiTrust allow a client to convert, let's say, 10% of their value each year from an IRA to a Roth? Keep it in the same contract, just have two different accounts going at the same time?
We do not allow that at this point, a partial conversion. I will tell you, we are working on a Roth conversion solution.
Okay.
To where somebody could do all that internally, systematically, like turnkey type approach. So that is a project currently being worked on that hopefully we'll have sometime this year. I mean, no guarantees, but you know, that's the plan anyway.
Sure.
So the question is not yet, but very soon. Pretty cool. We're gonna have a pretty cool solution, I think, pretty soon.
Well, good. Look forward to it.
Yeah. So I don't know if you have any other questions or.
I think that's all the questions right now. Anything you want to finish up with, Jason, on our webinar this morning?
No, I just want to thank everybody. Anybody submitted business with EquiTrust in the past, really appreciate it. If you haven't, I hope you'll give us a look. Like I said, the two new products are, you know, have really taken off well for us. The four original products have just consistently been strong. You know, appreciate you, you know, giving us the opportunity here, Matt. And
sure. Did you guys just announce a new trip, Jason?
Oh yeah, I was going to mention that. I was going to put a slide in there and I forgot. Yes, we did. And actually, it kind of coincides with your trip. So I think people qualify for your trip and ours at the same time. Our qualification just started January 1st, so we're only a month into this.
Right.
And ends June 30th, which I think is the same time yours ends, right, Matt?
Right. Yep.
Yep. So we're just taking our top 30 producers, but on our website, you can always see where you rank with us to have an idea. You know, my guess is $2.5 to $3 million is probably what it'll take to have a chance to get in the top 30 there.
It's reasonable. Yep.
We're going to Jackson Hole, Wyoming in September, staying at the Four Seasons there. It's going to be a very high-end trip. If any of you have ever been on a trip with EquiTrust, I mean, it's high-end from beginning to end. We take a lot of pride in our trips, and it'll be a great one. So I hope people will, you know, qualify or give it a try anyway.
You expect Michael
Magic?
Mr. Irvin Johnson. I said Michael. I was thinking Michael Jordan. Yeah, Irving. Is it going to get a surprise visit by him?
Yeah, I'll say this. Since he's been owner of EquiTrust, he's been on every trip we've been on. So I can never guarantee anything, but
right.
I anticipate he'll make an appearance. Yeah. So
yeah, be sure to wear your Converse All-Stars if you do attend the Jackson Hole, Wyoming trip.
I was going to wear my Isaiah Thomas jersey. I should do that.
That might be a bad choice. Maybe Rodman.
Yeah,
get your Rodman jersey out. But otherwise, appreciate the time this morning. Great presentation. A lot of great stuff there. I know that EquiTrust is really moving forward this year. You know, we're going to see a lot more business flow in their direction with these new contracts and with the, you know, the stretch IRAs, the Roth conversion ideas, and some of the stuff they've got coming out. Really, really nice combinations right now, and definitely going to see a bigger footprint, you know, with EquiTrust this year based on what IAMS does. So appreciate all that. Again, this is Matt Tour. If you have any questions, you know, post webinar, be sure to give me a call. I'll be glad to get any information out. We can email overnight, you know, get out whatever you need based on your needs. And we got some great software we can do some quoting on based on the EquiTrust products, and really a nice combination of what they're offering right now. And as I mentioned, going into IRA season, that Market 10 with that 6% bonus on all deposits the first 5 years, start out with $5,000, and then you can put monies in, you know, post based on your client's availability on cash. Really a nice combination, and that way you're not complicating things for your clients and having like one new policy every year. This is one plan, one contract. They just add to it. So definitely a good solution there. Probably one of the very few companies we have anymore that is really good for doing flexible premiums on a multi-year bonus. So definitely one of the very few companies we have out there that does that. But otherwise, appreciate everyone's time this morning. Everyone have a great weekend coming up. We look forward to a very prosperous 2022. And we will have product comparison pages. We do have those available through EquiTrust. They have a really good piece that has all their products, stacked up, one on top of the other one, interest rates. We have state availability charts, everything you need with EquiTrust. We've got all that available for you. So I'll be sure to get that out to everyone that needs that here from this morning's meeting. And then with that trip that EquiTrust has, a great time to, stack some business going their way, get a nice trip to Jackson Hole. And are you guys going in the early fall?
It's middle of September, so I guess it's a beautiful time to be there. So
Yeah, trees are changing. Get the
yep,
aspens changing color and everything else going up there, and right before the snow starts flying.
yep. Hopefully.
Definitely. And all you East Coasters out there, I know you really want some more snow, so we'll be sure you get your fair share moving forward. But otherwise, everyone have a great weekend, and thanks a lot, Jason, and we'll speak to everyone soon.
Yep. Thanks, everyone.
All right. Bye now.